Warren Harris, CEO and MD at Tata Technologies, joins in right now to talk about how their quarter was and what they expect going forward as well. Warren, great to have you on ET Now. Thanks for taking the time out and joining in. First things first, services, which is 78% of your revenues, was soft, led by seasonality. Do you expect this weakness to get protracted into Q4 as well?
Well, the third quarter is always a soft quarter for us. We have the festivals in India and the Christmas and the New Year holiday around the world. But our services revenues in Q3 were also impacted by the transition that's going on with one of our customers in Southeast Asia. We are at the tail end of the development of two electric vehicles for one of our customers here, and we are transitioning from the engineering work to launch support. So headcount is reducing. We saw that commence in the second quarter. It accelerated in Q3, and we will likely be done with that transition in the fourth quarter. So that's had an impact in terms of services growth tapering. We expect some of that to continue in Q4, but given the deal wins that we've been able to celebrate and the order book that we're taking into next year, we're extremely bullish for fiscal year 2025.
Operational efficiency and lower contract drove 140 quarter-on-quarter EBITDA margin expansion for you. Now, you've talked about 200 to 250 bips expansion over medium term. Walk us through what levers do you have which could take you higher?
Yeah, we benefited in Q3 because one, business mix improved in the second quarter for that same customer that I referred to in terms of the transition. We were doing a lot of test and validation work, and that's work that we buy in from some of the testing houses around the world, and so margins on that business are lesser. We also were impacted in Q2 by the relatively generous salary increments that we rolled out. In Q3, our bought-in services and our contractor headcount went down. We've also maintained a laser-sharp focus on things like offshoring, our people pyramid, and productivity. And I think that's a reflection of the discipline that we're driving into our business, the rigor that we're driving into the business. We expect margins to incrementally improve over the course of the next 12, 18 months. I don't think you'll see a 140 basis point improvement in any one of the quarters in the next year, but we expect to incrementally drive the appropriate levers in the right direction, and I think you'll see improvement in margins, particularly over the medium to long term.
Right now, your deal wins as well have been fairly strong this quarter. What is the nature, though, of these deal wins, and which are the segments that are driving this growth?
Yeah, well, we had a very strong quarter in terms of deal wins in both automotive and in aerospace. In automotive, we had a $50 million TCV win with one of our automotive customers in the United States. They're looking to add capacity, but they're looking to add capacity in offshore locations, and so we won that deal to really build capability for them here in India. We won a $25 million TCV deal with a European aerospace OEM that's focused upon the deployment of digital tools to help them accelerate their manufacturing throughput. We won a top hat deal in China with one of the specialty vehicle manufacturers, and then we've also won a number of digital deals that are focused upon extending the integration of the tools that define the digital product with those tools that underpin the manufacturing process, and that's an area that we are developing quite a recognition around. And so we've won a couple of deals, one with a new energy vehicle company in the United States, and another with a European OEM.
Sure. You talked about the deal win in aerospace, and I believe Airbus order is also expected to ramp up well, right? Is it fair to assume that FY25 growth will be led by the aerospace vertical?
Yeah, most definitely. We've been impaneled by Airbus about 18 months ago. We've been opening up offices in Toulouse and Hamburg to complement the footprint that we've got close to the Airbus facility in the UK. We've been going through the accreditation that's required by Airbus, and at the same time, in parallel, we've been building a significant order book with Airbus, and we expect to discharge some of that this quarter. But as we go into next year, we'll really start to see a ramp up. And of course, the relationship between Airbus and the Tata Group continues to grow. Not only is Airbus partnering with the group to develop and build the C295s here in India, but I think you may have seen the helicopter announcement last week. And so that partnership continues to scale and is very strategic to both groups. And we expect that commitment to provide tailwinds for Tata Technologies.
So coming back to deals and partnership, you've signed MOUs with Intel and others. Help us understand that what this would mean for Tata Tech in the SDV space.
The deal with Agratas is a deal that really extends upstream the capabilities of Tata Technologies. We've been somewhat renowned in terms of our electric vehicle development capabilities, and we've done a lot of work in and around the integration of batteries and battery management systems. But the partnership with Agratas will focus upon pack design and the manufacturing processes associated with bringing packs to the market. So we're excited about that. The deals with Intel and ARM are incredibly strategic in the context of our software-defined vehicle ambitions. The industry is transitioning from a supply chain that is essentially controlled by the OEM to much more of an ecosystem, and some of the silicon players will have greater and greater influence over the product development process in and around mobility systems. And so the partnerships that we're establishing with some of the major players really, I think, propels Tata Technologies, to the front end of the SDV world, and positions the type of a bundle proposition that I think is going to be very meaningful, not just to the OEMs, but also to the tier ones.
All right, thanks so much for taking time out and joining in. That's the takeaway then coming in from the management of Tata Tech.